Welcome to our podcast, Michelle and Stacey, all things small business. We hope you enjoy this episode and please visit our website, michelleandstacey.com.au. That's MICHELLEANDSTACEY.com.au. We would love to hear from you. Hello and welcome back with Michelle and Stacey talking all things small business. This is episode 15, which we're really excited about. And today we're going to talk to you, how can your business be profitable but have no cash?
Well, it's kind of like, it doesn't sound right, does it? Because you think, oh, wow, I'm making lots of money. My accountant tells me I'm making, I've made a big profit and all this. So my business is doing really well, but I've got $0 in the bank.
And that would feel a bit scary.
Well, it's normal for any business, really.
It is.
Don't they say cash is king? So cash is king. Doesn't matter how much profit you're making. If you haven't got your money in your bank, it's going to put a lot of stress on you.
It is. And we see this more than we would like with clients in all our years of experience. But let's talk to you, and you might be experiencing it yourself. So let's talk to you today about
some of the issues.
Yeah.
So I think the first issue is probably around cash flow. It's timing, right? Because obviously you sell something and, unless you're a restaurant that gets the money in straight away, on when someone orders something, that's a bit different. But a lot of businesses don't do that. So they don't get the cash. You might sell, you might be in the business of selling chairs, right? So if you sell chairs, you might sell the chairs, but it's through a wholesale. So you might ship the chairs out, issue a bill, give them 30 days to pay, but they haven't paid you and it's 90 days after you've sold the chair. So you're expecting that money 30 days, it's now 90. So you've actually had 2 months where you've had to kind of fund that other business's cash flow, really, at the end of the day.
Yeah. And this happens more than you think. And you could also be experiencing it yourself. So there's a few things you can do to try to remedy that.
When you're thinking about someone's not paying you, really, what are they doing? Well, you're in effect giving them a loan. It's like a silent loan.
Yes.
Because you're funding their business. They're using your business to fund their business, right?
Yeah. So it's like a very, very low doc loan because, and as Michelle said, it's a silent loan. There's been no agreement. There's been no discussion.
Yeah.
It's just, we haven't paid you. And the only discussion that may be is that you're getting some excuses for why the payment hasn't come through yet.
Yeah. And it's costing you time too, because you've got to follow up. It's not something that people like to talk about. It's kind of hard to raise it. And particularly, I know if people owe me money, I don't particularly, and if I've got that relationship, I don't like to talk about it. I usually try and ask someone else to ask for the money. I try and separate that. Everyone's a bit different how they operate, but I want to keep a good relationship and I don't want to be harping on to someone. But at the same time, I need to be paid. So you need to have the money in. So you've got to have a process within your business on how, what happens if people don't pay you? How do you go about it? Who follows it up and things like that?
Absolutely. And so that could be someone internally or externally, but you also need to have a process by means that the invoice has been sent out. There's some timely reminders that go out afterwards. And then if it's not still paid, like there needs to be an escalation process. And that sometimes could involve, lawyers sending a legal letter, depending on the value, whether it's worth it, or whether it is, you what leverage and power do you have? Like, can you change the terms of the next transaction that you have with that?
Or get cash on delivery or get cash before it goes out the door.
Yeah.
So you kind of can't let it just keep happening and stuff. So there's lots of things you can do with that. In the 1st of July 2026, there's quite a bit of change happening in a small business world.
In Australia. That
In
is,
Australia, yeah.
yeah.
That's where we live. So,
Just in case we have some overseas listeners, we can hope, right?
yeah, right. But we've got this thing coming in on the 1st of July 2026, and that's Payday Super. So pretty much that's going to have a major impact on people's cash flow. And I know a lot of businesses who have been on top of it because we've known it's been coming for quite a while. It really means when you pay your salaries, if you pay weekly, now you have to pay the super on the same day you pay the salary. Whereas previously, you only had to pay the super after like 28 days after the end of the quarter, right? So you've got to make sure that you've got the money at that point in time. So it's kind of going to be, once people get into the groove of it, I think it'll be fine. But initially, you may not have the cash.
Yeah, July 2026 will be the biggest crunch time for small businesses with this Payday Super coming in. We did do a bit more detail in another episode on Payday Super specifically.
Yeah.
But that was thanks for sharing that again, Michelle. And I guess why July is the real crunch time and why that's so important is that July is going to have sort of a double whammy in Superland because you've got to pay your June quarter super for
If
the
you're
June.
paying,
Yeah, if you're paying quarterly.
That's due at the end of July.
That's due. Yeah, for the June 2026 quarter, that whole super payment is due by the 28th of July.
Yeah.
Come 1 July, the first payroll payment that you make in July 2026. The super for that payroll period, so if you're paying 1 week into July or you're paying fortnightly, whether it's the first week in July or that first fortnight payment in July, that's when that July payment is due. But they use the FIFO method. So first in, first out in terms of your super payment. So if you make your super payment for the July payroll period, when you make that first payroll in July. So
they'll put it to the quarter. And
so you would be late. So instead of then that June quarter payment being due on the 20th of July, it's actually been brought forward in reality. So you kind of need to be ready in early July to make your June quarter payment and your first payroll payday payment for super.
So I think
July's going to be tricky.
It will be tricky. As I said, if you haven't been paying your super and trying to pay it on the date, it's going to be a bit of a rude shock, I think, for people to get used to. Once you're used to it, I actually think it will be good because it will smooth out the cash flow rather than have it like here, bang, and then down. It's going to be smooth all the way along. So once you're in the groove, I think it won't be so bad. I just think it's going to be this transition period that's going to be an issue.
I think you're spot on, Michelle. And I think the other piece to it is before we're talking about silent loans, some people have, because they've had the whole quarter to kind of reserve that money and then pay the super. Some businesses have used the super in that quarter to pay for other bills, to help them along with their cash flow. And then, because they know or they've projected that they're going to get a whole heap of money in time to pay the super. And that has been fine in the past. It's worked for them. For example, that because of the new super rules, that's not going to work for them. And
well, I guess it goes to the point that I think there's been some studies done that show that most small businesses have less than 3 months worth of cash reserves in the bank, right? And that kind of plays to this, right?
Absolutely.
Because we're talking a quarter, which is 3 months. So, it goes to show that when you've got a change like this, it's going to have a big impact. Or if something happens in the business that's unexpected, or, one of your customers goes bust and they don't pay you, this is going to have a real impact. Yeah. But you said in the beginning that how can your business make a profit but not have cash, right? So we've kind of just highlighted a couple of problems, with cash flow, what it means. But I guess for me, I think it would be good if we step through what is profit and what is cash, because they're quite different.
They are quite different. There's some similarities, but there are quite a number of differences too. So I guess let's
start with the first one.
Start with the first one.
So first one is sales, right? So you're selling a product and you get money. Yeah. So as we said before, most people will get the money in after the sale, so 30 days or whatever your terms are. If you're lucky enough, as I said before, to sell, or, as a retailer or whatever, you'll get on the sale, you'll get the money straight in. But you've got that plus the GST on it. So you can actually use the GST to your advantage, provided you're good at forecasting, because the GST will be payable out when you pay your BAS, right? But that is a little bit of an opportunity to use that cash. But again, you need to make sure that when the BAS comes around at the quarter, that you've got that GST sitting there to be paid out.
Yes.
Mm-hmm.
Yeah, that's a good one. Another one is the wages and super. So it's kind of, sort of ties in with what we are talking about before. So with Payday Super coming in, wages and super are going to be due on the same day.
Yeah.
So, and that's a cash payment. Now, remember though, wages is a gross amount, right? What you pay the employee though is the net amount, and the tax component of that, so the PAYG withholding component of that, is payable usually when you lodge your activity statement. So there is a bit of a timing difference there.
Yeah.
So that kind of fits in like the GST in some ways.
That's right.
So
That's right. So you can use, depends. If you're on like a monthly payment, it's probably not that much of a timing difference. But if you're only on a quarterly BAS to pay your PAYG, then you have use of that money for that quarter to pay it.
Yep.
But you've also, but it kind of compounds, does it? And then comes to the month of the BAS and you're going, oh, I've got this huge payment to pay. Whereas you think, oh, I've got lots of money in the bank and, oh, yeah, good. But, oh, hang on a minute, I need quite a bit more to pay my BAS.
Yeah. Yeah. And then there's another one is like your operational, your everyday type expenses for the business. So that's basically, I guess, the reverse of the sales.
Yeah.
Is that most likely you'll be invoiced for those amounts and you need to pay them by their due date.
Yeah.
So, so it's
I
going to come down to timing.
I don't know about you, Stace, but I like to pay the people I owe money on time.
Yes.
I don't like to keep them waiting. Like sometimes you might stretch it a bit, but I think it's respect. Like, and I don't want to be the use them as a silent bank just for the sake of it, or if you're having an issue with cash flow, to me, the right thing to do would be to ring that person that you owe money and say, hey, I'm going to pay you, just having a little issue at the moment. I'm just letting you know, I'll pay you, but it's probably instead of this date, it's probably going to be like this date. And I think people really appreciate that.
Absolutely. Like you'd know, those of you that are in small business, is that it's built on relationships.
Yeah.
And so a really good way to keep that relationship strong, especially when you're going through a tough time from a cash flow perspective, is keep that communication up and just be honest and transparent about it.
Yeah. It's not a bad thing. Everyone goes through it. So, people will appreciate it. They won't think bad of you when you do that. They'll just say, oh, okay, fine. Yep.
Exactly. And when you can pay on time, you should be paying on time because, legally it's due. But also that's how you build that trusted relationship as well. And, just put yourself in that supplier's shoes. So that person
just think of it's in the reverse.
Yeah, exactly. You would want your customer to, contact you if they're, having trouble or whatever and make an arrangement with you. Once you know the situation, it's easy to understand and then plan for, right? So if you are forecasting, well, now I know what's going to happen and I need to put that in my forecast. So,
The next thing on profit, which is definitely not anything like cash, is depreciation.
Ooh,
so what does actually depreciation mean?
So depreciation comes into play when you purchase, say, a capital asset. So it might be, let's say, a motor vehicle. A car. And that car might be, let's say it's $30,000. Now, at the moment, under current rules for small businesses,
if it's less than 20,000, you can write the whole amount off.
Yes.
If it's over 20,000, you can write off 15% of the value.
Yes.
So 15% of the 30,000.
And write off in this scenario is depreciation.
Yeah. So what happens? So in this case, if you buy the car in the first year, and it's 15% of the 30,000, that goes in as your profit.
Yes.
Okay.
Yep.
So that's going to bring your profit down by, that amount. So that's your depreciation. Yeah. As opposed to the cash is the actual purchase. Yeah.
Yeah. Correct.
Yeah.
Correct.
And the next thing?
The next one is interest. So let's say you have a business loan
Mm.
and let's say it's a principal and interest repayments on that loan. So each month you're going to have, from a cash perspective, you're going to have to pay the whole amount.
Mm.
But from a profit perspective, you're only going to be claiming the interest amount.
Mm.
So the interest amount is what's going to reduce your profit.
Not the
Not
repayment.
not the principal component of it.
So if your interest is low, it's not going to be much. Yeah.
Yeah, yeah. If it's an interest only loan though,
it'll be the full amount.
it'll be a full amount.
Yeah.
So that's the effect of a loan, on your profit.
The next one is your cost of sales. And by
Yeah.
cost of sales, so if you, again, let's talk about, say you sell chairs. So if you buy chairs, you've got an inventory of chairs
Yep.
to sell. So your cost of sales is not when you go out and you might buy 100 chairs to be in stock.
Yes.
It's not, the cost of sales is not the 100 in stock. The cost of the sales is that one item that you sell out of the 100. So you might sell one and got 99 left. So what goes into the profit calculation is that one chair comes
Yes.
across, not the 100.
Yes.
Okay.
Yeah.
So big difference there.
Yeah. Yeah. Big difference. And then the fun one, tax. Yeah. So you've made a profit at the end of the year when you've done all your calculations, and you have to pay tax on that profit. And the tax that you have to pay on that profit is typically paid months later.
Well, yes, it is. It depends on the timing as well, on what your profit's been in the prior years. But for small business, it's 25% of the profit. So let's say you had $100 profit, you'd have to pay 25% tax. And if that's the first year that you've made a profit, that $25 in tax would be due on and if it's in a company, it would be due on the 15th of May the following year. So you can use that $25 for that whole period, but you've got to make sure on the 15th of May on the next year, you've got that $25 to pay. Once you're in the system and once a company, say, if it starts making money, in your BAS, the lovely ATO will go, hang on a minute, last year you made $25. I'm going to split that in 4 and I'm going to spread it over the BAS.
Yep.
Right? So in effect, you're paying it up front. So in that first year, you'll have a double whammy again, like the super, because you've got to pay the 25, then your next BAS is going to come. And you're going to have to pay $7,500, right?
Yep.
So it's kind of like a double whammy all at once. But then again, once you've into the groove and it comes around, and say you make $25 profit in the next year, well, you actually don't need to pay anything because you've already paid it. Because you paid it through your BAS.
Yeah. It's only if you make more, you pay a top up.
Yeah.
So you got to pay tax on your profit.
Yeah.
And remember, the way that the way the profit is calculated is not actually just on cash items. Yeah.
It's usually on accrual, and by accrual we mean the date that you have invoiced something. So again, go back to my example of selling a chair. I sell it today, I invoice someone, and they pay me, if they're paying me on time, 30 days later. But what goes into my profit calculation is the date I raise the invoice for that chair. It says I've sold that chair today, even though I don't have the cash.
Yes.
Right? And that's on the accrual basis, not on cash.
Yeah.
That's saying I've accrued for it because I know I'm going to get the money. I've already sold it.
And the profit is calculated on an accrual basis, most likely.
Yeah. Yeah. The majority. Yeah.
Yeah.
Yeah. Okay.
Well, I think we've done a pretty good job at covering
profit.
Yeah, profit.
So what doesn't come, so, in your set of financial statements, you've got a profit and loss and you've got a balance sheet, right? So we've just talked about the profit.
Yep.
Right? And that's what you pay tax.
Yep.
The balance sheet is all the other items in there. So, and they are all, not all, but a lot of those are cash, right? So let's just go through those items.
Yeah.
What's cash?
So what's cash is, so we talked about sales before, well, debtors. So when Michelle just talked before about the chair scenario, so you're in business and you're selling a chair. So when you sell that chair, let's say that chair's sold for $110, which is $100 plus GST. What's going to hit your debtors account is actually the $110.
Mm.
But what's going to be recorded in your sales revenue account is the $100,
Mm.
and the other $10 is going to sit in your GST account,
Payable
payable
to
to
be
the
paid.
ATO.
Yeah. In your VAS. Yeah.
So, in Michelle's scenario, we've raised that invoice for $110,
Mm.
and we haven't been paid yet. So
Mm.
we have a debtor of 110
It sits there as people owing you the money. So it's actually an asset.
until they pay you.
Mm.
And so the quicker they pay you, the
The
nicer
better.
that is.
Mm. Yeah.
Um,
The next one would be, we talked about briefly before about the tax and super payments as well. And again, the super now is due on the same day as the wages. So that's going to be straight away, as opposed to what Stacey referred to before is when you pay the salary. Say the salary is 100 and there's 25 in tax. So the employee only gets 75. So on payday, you pay 75 to the employee and the other 25 gets paid through the activity statement, either monthly or quarterly. Okay. So again, you do have use of that money for that period of time, but you just have to make sure that you've got the money sitting there when the payment date is due.
yeah, absolutely. Absolutely. Next one is, I'd say, creditors. Let's say the creditor is actually, in this scenario, you got to pay rent
Mm.
for your office building. And so that rental payment is one that you make every month,
Mm.
but you still get invoiced for it every month and you record that. And so one side of that, the net amount, so the bit that doesn't include the GST, is going to be going into your profit and loss statement as an expense.
Mm.
So it's going to be reducing your profit. But from a cash perspective, you're going to be paying the
You got to pay it out.
yeah, you got to pay
Yeah.
it out, and you got to pay the whole gross amount when it's due.
Mm.
So that's a bit inclusive of GST.
Yeah.
Keeping in mind, though, you're only getting a reduction in your profit
Mm.
or the net amount.
Yeah. Yeah. The next one we talked about before, if you have a loan, and we talked about in the profit, you can claim the interest portion of the loan. To reduce your profit. But if you've got a loan, like for working capital or for car repayments or whatever, you've got to pay that whole amount of loan, like that whole amount, right? So, people forget that. They think, oh, I've made a profit of, $100, but you might have loan repayments that are $20,
Yes.
right? So that's actually cash negative because all your profit's eaten up and you've got to pay the loans out. So you just got to bear that in mind, that profit, again, does not equal cash.
Yes.
So you need to be clear on that.
They are different.
Mm.
Next one is stock purchases, which was
Yeah.
before, yeah.
So it's the timing of the stock, right? Because you'll need the stock and it will sit there. So I guess the main thing for this, and it depends, if your business is reliant on having a lot of stock, it's very important that you have a really good stock control system. And what we talk about is the control of the stock turns, right? So, depending on the type of stock and, you might get it from overseas. So it might actually take 3 months to get there if you're buying it, it's on the ship and by the time it comes out and gets into your warehouse and stuff. And so you really need, you might say, I really need at least 6 months worth of stock to keep me covered to do the sales. But, sometimes people say, oh, hang on, they're having a sale or they're giving me a really good deal. So I buy a year's worth of stock instead of 6 months worth of stock. So therefore, and say your inventory might be $1 million, right? So then you've got you've got that extra money tied up for that 6 months that when you don't really need it. So it's really important to be very clear on what stock you need and have a really good stock system.
Absolutely. It probably goes hand in hand in some ways with having too many debtors.
Yeah.
Because
Yeah.
basically your cash is locked up. You don't actually have cash. You have an asset of a different type.
Mm. Mm.
Um,
I think that's kind of a pretty good synopsis of, cash versus profit.
yes.
So just reiterating profit, all the items in the profit are not cash. And there's more items that aren't in the profit that are cash. So cash, really, I guess you want to make sure that you're making enough profit to be able to cover those extra cash payments that is not sitting there, like your loan repayments, like this, when you're buying stock that you've got the money there to buy it
Yeah,
and stuff.
absolutely. And I think it's really important to note that cash flow isn't just about making more sales. That's
Mm.
what sometimes people think is I'll just make more sales and I'll be right. You can fall into some traps there doing that.
Mm.
Um, also, it's about the flow of funds, right? And having funds available at the right time when you need it.
Yeah. I mean,
S-
next episode, we're going to talk about what can you do to help you with your, to manage your cash flow. We're going to talk in a little bit more detail about actual cash flow forecast and what you can do with certain things, um, with cash and how to manage that, like Stacey's saying. So that's for our next episode.
Yeah,
Hmm.
yeah. Well, thank you so much for listening today. We hope you got a lot out of it. From our perspective, we had fun
Yeah, yeah.
talking about it. And yeah,
And it's quite common, I think, that people don't really understand. Like, not everyone in business, like everyone has a really good, they have good value in certain things, right? Like, we're accountants, so we should know a bit about money, and we can add up and subtract and do all of that. That's our job. So obviously you would hope that we're good at that. Yeah. But not everyone is good at that, and they might be a brilliant salesperson. Yeah. And they're not great, and they don't feel confident about the dollars and the money and the financials, right? So just because you run a successful business doesn't mean that you're great in this area, and you don't necessarily have to be. But that's why we're going to talk about our next episode about cash flow forecasting. And if you're not good at it, like, who can help you? Obviously, your accountant, should be able to help you, or someone within your business and stuff. Okay. Thanks for listening.
thanks for listening. Bye.
Thank you for listening to today's episode. We hope you found it informative and useful. We would like to clarify that this podcast is for educational purposes only. The conversations are of a general nature and do not qualify or constitute as financial or tax advice. The views and opinions expressed by the hosts and guests are their own and do not reflect any official stance. We make no guarantees about the accuracy, reliability, or completeness of the information presented and are not liable for any losses or damages arising from its use. We recommend you seek the advice of your own legal, financial, or other licensed professional before making any decisions based on the information provided in this podcast. We hope you enjoyed today's episode and tune in again soon to listen to further episodes.